All right, guys, welcome back to another Wise Wealth. Today, we're going to be going over indexes, ETFs, and commodities. So, first off, what are commodities? They're basically just goods that are interchangeable between different producers. And some examples would be like cattle, gold, coffee, oil, grains, natural gas. Usually, commodities are very volatile and they're sensitive to economic conditions because that's just how they're traded all over the world. Supply and demand. If the demand for coffee goes up, that's going to affect the price, et cetera, et cetera. If there's a shortage, if there's a weather event that hits a grain field and gets rid of, makes it hard to produce grain, obviously the price of grain is going to go up, all stuff like that. Since they're an asset class, they can be traded on the open market. Now, how you can trade these on the open market is either futures or through ETFs. And we're going to talk about ETFs, but I'm going to make another video on futures since futures are a little bit more complicated. So you can see coffee, gold, oil. And now, since we just said you could trade it via an ETF, what is an ETF? An ETF is an exchange traded fund, which is basically just investments that are pooled together. And essentially, what an ETF is it represents a basket of underlying assets. So you have stock ETFs, index ETFs, crypto ETFs, commodity ETFs, currency ETFs. You have a bunch. And you can trade these just like stocks under your brokerage. Your brokerage probably offers that you can either trade stocks or ETFs. So let me give you guys an example of ETF. So we have Bitcoin ETF. So with a Bitcoin ETF, you're not actually trading Bitcoin, but you're trading ETFs, which represents or is directly proportional to the price of Bitcoin. So think of it like this: if you wanted to trade the S&P 500, you would trade an SPY, which is the ETF for S&P 500, which in turn represents 500 companies. It's like a basket of goods that is one value. Now, what are the benefits of investing in ETFs? Well, you can invest in more expensive assets at a lower price. So look at this. If gold trading at $2,600 an ounce, you could buy a gold ETF for $250, which is substantially cheaper than $2,600. Now, obviously, it's not going to, if it goes to 2,800, the 250 is not going to go to 400. It's probably going to go to 255 or something like that. But it is cheaper if you want to get into certain asset classes that otherwise might be harder to invest in. And ETFs provide great diversification because, like I said, you could get into other asset classes, commodities, currencies, indexes. And ETFs just have a lower expense ratio, so it's also saves you money. Now, what are indexes? It's essentially a basket of assets that can be used to gauge the strength of an economy. So you're probably familiar with these. We got the S&P 500, we got the DJI, Dow Jones Industrial Average, and we have the Nasdaq. And the S&P 500 is just the top 500 companies that's represented by, I think it's trading at somewhere like 5,800 right now, which is just a representation of the 500 companies. Dow Jones Industrial, 30 biggest blue chip companies that trade on the New York Stock Exchange, and the Nasdaq. Similar thing, but Nasdaq is mainly led by tech companies like Nvidia, Tesla, um, Microsoft. And how do you invest in indexes? Well, like we just said, you can invest in indexes through ETFs. Now, that's essentially what indexes, ETFs, and commodities are. The best way to invest in all these things, I would just say, is obviously ETFs. I have a couple myself. I think I have some gold ETFs and some currency ETFs, and some index ETFs actually. Um, but yeah, if you want to get into certain asset classes that are otherwise expensive or you're unable to, indexes are a great way. You could also invest in real estate through a real estate investment trust, or you could do an ETF for a real estate investment trust. But yeah, it's just a good way to diversify. And for instance, Bitcoin, if it's trading at $60,000 and you don't have $60,000 to buy a Bitcoin, you could trade a Bitcoin ETF. But yeah, that's basically it. It diversifies your portfolio and allows you to get into asset classes you otherwise wouldn't be able to normally, which is why I love commodities, indexes, and ETFs. That's it. I'll make another video on futures and derivatives because they're more complex than just the basics. But yeah, thank you for watching.